Alright, let's dive into the numbers that are making waves across crypto Twitter. According to Artemis Analytics, SEI just surpassed BNB Chain in stablecoin supply growth over a single 24-hour period. Not over a month, not over a week, 24 hours. Now, if you're not immediately grasping why this matters, let me spell it out. Stablecoins are the lifeblood of crypto trading. They represent actual capital sitting on-chain, ready to be deployed. When stablecoin supply explodes on a particular network, it means serious money is flowing in. It means traders, liquidity providers, and institutions are making strategic decisions about where to park their capital. Mark Sean Brown caught this movement on November 12th and immediately flagged it to the community. The spike wasn't gradual. It was explosive, sharp, decisive. But here's where it gets really interesting. This wasn't some random pump from retail FOMO. The movement coincided perfectly with the launch of new trading protocols on SEI. Fresh DeFi primitives are hitting the network, offering advantages that traders just couldn't ignore. We're talking about execution speed, lower costs, and, yeah, even tighter spreads. Liquidity providers responded instantly. Suddenly, capital that was sitting comfortably on BNB Chain started migrating. Why? Well, because in crypto, capital is ruthlessly efficient. It flows to wherever the advantages are most pronounced. And right now, SEI is demonstrating advantages that are honestly impossible to dismiss. On-chain analysts are treating this as an initial signal, not a definitive regime change. At least, not yet. That's smart. One day doesn't make a trend, but when you see concentrated liquidity moves this sharp, it really demands attention. It demands investigation. So let's zoom out and try to understand the broader implications. BNB Chain has been a dominant force in the crypto ecosystem for years. It's got a massive user base, established protocols, and deep liquidity pools. Yet here we are, watching capital reallocate towards a network that prioritizes pure trading performance. This tells us something critical about where the market is heading. Traders and liquidity providers are getting more sophisticated. They're not just chasing hype anymore. They're analyzing execution quality, operational costs, and network efficiency at a granular level. For high-frequency strategies and algorithmic market makers, small differences compound massively. A few basis points in fees here, slightly faster finality there, it all adds up. And when a network can deliver measurably better performance, capital moves fast. BNB Chain isn't collapsing by any means. Its ecosystem remains robust, but the fact that it's staying relatively flat while SEI experiences explosive growth should raise eyebrows. It suggests that specialized venues designed specifically for trading are pulling order flow away from generalist chain. DeFi projects are taking notice too. We're seeing increased migration and new launches specifically targeting SEI. Why? Because where liquidity concentrates, opportunities multiply. Higher on-chain volume means deeper order books. Deeper order books mean better execution for users. Better execution attracts more users. It's a flywheel effect. Quick pause here. If you're finding this breakdown valuable, and you want to stay ahead of moves like this before they become obvious, smash that like button right now. And if you haven't already, hit subscribe and turn on notifications. We're tracking these liquidity shifts in real time, so you don't miss the next major rotation. Alright. Let's get back into why SEI's architecture makes this possible. So, what makes SEI different? Why is it suddenly eating BNB Chain's lunch in stablecoin growth? The answer lies in technical design choices that most people overlook until they start mattering. SEI was built from day one for low-latency trading. We're talking deterministic block times, parallel execution, and optimizations at the matching layer that directly reduce friction for market participants. This isn't generic blockchain tech. This is purpose-built infrastructure for exchange-grade performance. Okay, let me break down why this actually matters. Parallel execution lets independent transactions process at the same time, instead of everyone having to wait in a single line. During those peak trading periods, this is absolutely crucial. While other chains might get bogged down with congestion and delayed transactions, SEI keeps things running smoothly with consistent throughput. Deterministic block times give you predictable execution windows, and for algorithmic traders, this is honestly like gold. They can estimate latency with real precision. They can model risk way more accurately. Plus, they can deploy strategies that just wouldn't work on chains where finality is unpredictable. So, here's the thing about trading infrastructure. Throughput by itself doesn't guarantee success. You really need the whole architecture optimized for market microstructure. SEI actually delivers on that. You get rapid finality, predictable order processing, and reduced adverse selection costs. For market makers, this creates an environment where fill probabilities become more consistent. That consistency translates directly into tighter spreads, which benefits end users. It's a win-win that compounds across the entire ecosystem. The combination of parallel execution and deterministic timing isn't just theoretical, it's producing measurable results. We're seeing it in the stablecoin inflows. We're seeing it in the decentralized exchange volume metrics. We're seeing it in the migration announcements from established protocols. Now, here's the critical question. Is this a temporary spike or the beginning of a sustained trend? On-chain analysts are watching several key metrics. First, 7-day rolling stablecoin inflows. 1 day is interesting. 1 week starts building a case. Multiple consecutive weeks, that's when you know capital reallocation is real and persistent. Second, decentralized exchange taker volume. Are traders actually using the liquidity that's flowing in, or is it just sitting dormant? Active trading volume validates the thesis that SEI is becoming a genuine trading hub. Third, local order book depth. If we see order book depth doubling while maintaining tight spreads, that's concrete evidence of improved market quality. That's what attracts institutional flow. Mark Sean Brown's observation on November 12th was the canary in the coal mine. Short windows can attract concentrated liquidity moves, but we need confirmation over consecutive weeks. Sustained growth exceeding 20% week over week in protocol revenues would constitute clear evidence of a regime change. For immediate assessments, tools like Artemis remain invaluable. They help separate one-off bursts from repeated patterns. Smart traders are monitoring these dashboards daily, watching for the pattern to either strengthen or fade. The signal is clear, but, it requires verification. SEI's rapid stablecoin supply growth is a warning shot that demands continuous monitoring. We're potentially witnessing the early stages of a major liquidity rebalancing across chains where trading efficiency matters most. So there you have it, crypto fam. SEI just proved that purpose-built trading infrastructure can compete with established giants like BNB Chain, not through marketing hype, not through celebrity endorsements, through pure technical execution and measurable performance advantages. Is this the beginning of SEI's dominance, or will BNB Chain strike back? Time will tell. But one thing is certain, chains that prioritize trading performance are attracting serious capital, and ignoring these shifts could mean missing the next major opportunity. If this analysis opened your eyes to what's really happening beneath the surface, show some love by dropping a like on this video. It genuinely helps more people discover this content, and subscribe to TJ Crypto World if you want to catch these liquidity rotations before they become mainstream news. I've also got a deep dive coming on 3 Layer 1 blockchains positioned to capture massive DeFi flow in Q1 of 2025. You won't want to miss that breakdown. Link is popping up on your screen right now. Until next time, stay sharp, stay informed, and remember, in crypto, the smartest money moves before the crowd even knows what's happening. This is TJ signing off. Let's build wealth together.